Hello again, everybody. I'm Brad Spirrison, and let's just say that was operator error on my part. I had too many tabs open. Uh, Good morning. Thank you so much for joining our Cannabis and Capital Summit. Today and this morning, we're going to have a panel conversation on the venture capitalist's perspective on cannabis investing. And I'm going to introduce our panelists in a moment. But first, I want to thank everybody for being here. And I also want to thank our sponsors, MGO, Cannabis Facilities Construction, Verta Innovation, Seed to Sale Financing, and Illinois Equity Staffing. So allow me to introduce two of our three panelists. Our third panelist will be arriving in a moment. Are we on? We are on. And Carrie Jordan from Supercritical. Carrie, please tell us your background in cannabis investing and how you got here. Then we're going to be talking to Patrick and Michael Gruber momentarily. Thank you.
You're muted, I think.
Carrie, we're still not getting audio just yet.
Are we good?
Yes, go for it.
Hi, everyone. Thank you so much for including me today. It's a pleasure to be here. I'm Carrie Jordan. I'm co-founder and managing partner of Supercritical. Along with my partners, Sparky Rose and Jay Cowie, we are a cannabis consultancy based in Chicago. Prior to forming Supercritical, I worked primarily in alternative investments. I began my career at NASDAQ, then moved on to Bank of America, where I was involved in derivative structuring, and then worked for a hedge fund. And lastly, I was the COO of a private equity firm based here in Chicago, where I was responsible for PE and venture investing. So my background has historically been in finance. A few years ago, I was looking to see where I was going to go next with my portfolio of skills in investing in finance, and cannabis was just the bright spot on the horizon. So I'm delighted to be here and looking forward to share with all of you my information from a VC's perspective on what we look for when we're making an investment, as well as give some tips to entrepreneurs on things that they can best do to make themselves most attractive to VC capital.
Excellent, Carrie. Thank you so much. And coming in from Boulder is Patrick Ray with Canopy Boulder.
Hi, how you doing, Brad?
Thank you so much for joining us, Patrick. Welcome to the world of technology and cannabis conferencing.
Yeah, happy to be here. So again, my name is Patrick Ray. I'm the founder and CEO of Canopy Boulder. We have been doing business acceleration and investing in the cannabis industry since 2015, but we really started our work in 2013, looking at the industry, trying to understand where there were opportunities, venture-style investment opportunities. Since then, we've made over 130 investments into 115 companies, mostly in the ancillary products and services space. So we've had a lot of reps on this industry and all the sectors and environments that any entrepreneur is going to deal with. We've raised a lot of capital, deployed a lot of capital, and prior to this, I was in the natural products and dietary supplement industry for about 15 years in investment banking, venture, management consulting, and operating roles. So I see the cannabis and broader cannabinoid industry in very similar terms to that sort of preferred alternative industry, which is natural products and nutritional supplements. So happy to be here. Happy to share my thoughts.
Excellent, Patrick. And Michael should be joining us. I see that he's in spirit on the chat. But on Earth, let's take a little bit of a historical perspective. Patrick, as you mentioned, you've been in this industry, for since 2005, 2006. Lots happening. The markets are flooded. Here in Chicago, there's news of a scion of the Wrigley family saying that his pot company that's buying into Illinois right now could be bigger than his family's chewing gum. A lot of us are just in this market for the first time. Maybe give us a little bit of historical perspective of other boom bust cycles, or give us perspective of somebody who's been here for a long period of time as to what's going on right now.
Well, I think it's not surprising that a company or family like Wrigley is going to be coming into the industry, because they're we think of them as gum, but there's a lot of spearmint and peppermint extract that they have had to source. These are plant ingredients, botanicals, and they understand that market and actually have some activity in that nutritional ingredient space as well. So it's not surprising to see folks from companies like Wrigley, or families like Wrigley, or families like Coors, who are developing products for people, consumer products, to get in and interested. And this is a good thing. The more people that sort of get under the tent, the bigger the tent, the bigger the impact, the bigger the influence, the faster we can get to full legalization and normalization of cannabis, which I think is going to be not only great for us as investors and entrepreneurs, but for society as a whole. So I'd always try to think about new people coming in with that historical context.
Thank you, Patrick. Now, Carrie, there are a lot of first-time entrepreneurs here, particularly in Illinois, Michigan, and Missouri, starting their cannabis companies. You've been on both sides of the desk as an investor and now somebody that helps entrepreneurs with due diligence. Talk about the table stakes, or the requirements a cannabis company needs to have, prior to making their first pitch with an individual or institutional investor.
Sure. VCs look for a few primary things. They're going to want to know, is there a market need for the product? We've clearly established that in 2020, especially during the pandemic. They also want to know, what problem are you solving and how are you unique? Is this problem recurring? And we know that there are lots of wellness applications. There are lots of recreational applications for cannabis. The other thing VCs are going to look for is how your product is unique or different. And are you solving a problem or providing a solution in a different way from anybody else? The other things we're going to be looking for are the capabilities, the skills and experience of the founding team. Have you run a startup previously? Have you done an exit before? What's your experience and insight? Have you been an entrepreneur before? Also going to take a deep dive into the growth metrics. So things like, what's your monthly revenue, user acquisition, units sold, referrals, downloads, all of those types of things. And then when the VC is looking at the company, it has a laundry list of things that it wants to understand about the firm. And they're going to be focused in 4 primary areas. They're going to look at the people, the product, the market, and the deal. So entrepreneurs should have all of their information available. Data rooms are super easy to set up these days, but you're going to want to have information about the founders, get all of your biographies in there, your resumes. You want all information about your financials, both past as well as pro forma. Anything that you've done in terms of technology and patents, IP, have that in your data room. And then the topic of valuation, and we'll speak to that further, but we really need to have a conversation around what the valuation is. I think that a lot of entrepreneurs get kind of hung up on their valuation, but really keep in mind that the valuation is going to be what you and the investor agree it will be. So that's something that there are different methodologies that you can use. We at Supercritical apply 4 of them. Oh, hey, Michael. It's so nice to see you. Welcome. So those are some of the initial thoughts I have around the process of what VCs look for and then what entrepreneurs can bring.
Awesome. And Michael, thank you so much for joining us. And now I'm frozen. And that's
We can
great.
hear you though.
You can hear me, and that's the face. Well,
That's a great look for you, by the way.
that is a great look for me. Michael, thank you so much for joining us. Michael, I've been covering you as a venture capital reporter and you in the industry since the .com days. Maybe start with a little bit of a parallel. You've kind of been in cannabis for like 5 or 6 years, and I associate that market with what we saw in digital. And we started off with a little bit of a historical perspective. Maybe if you can provide from like a Chicago specific or Midwest specific investor angle, where you see today's cannabis market relative to when you first joined in 2015.
So actually it's actually approaching almost 8 years in the industry. So it's been a long time. And as I lived in Asia for a while and was in the tech scene, and then I spent 10 plus years in Silicon Valley. So as you and I have talked about, I do see some parallels to, I would say, almost internet 2.0, as well as even the current phase of crypto, because I got involved in some stuff on the crypto side probably 5 plus years ago. So I think if we just look back, and this is just sort of a macro point of view, even outside the Midwest, I think when any new exciting technology or sector, you get a lot of folks that come in, and they're always the visionaries and the thought leaders of trying to really make a difference. But what you also have is a lot of sort of half-baked plans, and you have a lot of folks who don't have a lot of experience really building business. And usually the initial folks, it was difficult to access capital. I think we're in the second wave that we are in right now. We have a lot of players that have come out from traditional industries with a lot of experience of building companies, and you're starting to see access to capital becoming a lot easier. And with respect to the cannabis industry, a lot has changed also on the regulatory side. It was unclear for a lot, and especially for investors, they were uncertain or how undetermined about how they wanted to participate, given the differences between federal and state policies and illegality, and worrying about the ramifications both for themselves, their families, their businesses, if they had invested. Clearly, where we are now, we have dozens of multi-billion-dollar publicly traded cannabis companies, and as well as a number of private multi-billion-dollar companies. And seeing that success, seeing the stigma going away in terms of the use of cannabis, but really understanding the medical efficacy of the use, I think has opened up an entirely new door. And in the Midwest specifically, as you've seen here in Illinois went from a pretty sleepy medical program to an incredibly robust adult use program. And you have other states, especially in the East Coast, which were limited license states, and where a lot of investors have flocked to these limited license states versus what we saw in Colorado or California initially, which were much more open programs. So, I think that's sort of the big transition. I think people are seeing the success, the capability, the professionalism, which I think opens up an entirely, very vibrant industry for people to be involved both on a professional level as well as on an investment side.
Thank you. I'm going to pick up on that point. We hear a lot about so-called cannabis 2.0, right? And I know this is a little bit different from the script, but so is the tech right now. So let's kind of go there. I mean, there's this first wave of initial operators, but now you have companies that are raising money that presumably are a little bit more buttoned up. Is that a thing? Is cannabis 2.0 a thing from a venture standpoint, where there's just different requirements and different skill sets? Patrick, let's start that with you.
It's interesting to try to put a label on it, and 1 and 2.0, these are things we hear about all the time. I've heard people say 3.0, 4.0. I mean, when I started in 2013, we were hearing cannabis 2.0 is coming, and that was just having licenses, having it be legal in different states. So I don't know. I think we're on a constant evolutionary curve, a constant innovation curve in this industry, as we should be. It's an emerging, nascent industry. One which is going to be driven by innovation and new products and better products than the market standard. Look, I mean, cannabis is a alternative to the mainstream. And if you look at products that are alternative to the market standard or mainstream, they are full of innovative, new, different things. And if they want to stay at the forefront of consumers' minds, they continue to do things differently and innovate. If they don't, someone comes in and replaces them. So I think we're on a very rapid innovation curve, a very steep innovation curve right now. But there's a lot still to come. I say this all the time. The race has not been run. The winner has not yet been decided on this thing. So there's always room for better. And for entrepreneurs joining the industry, this is their first conference. Yes, it's a very different industry than it was 5 years ago, but there's going to be opportunities for entrepreneurs and investment, very good opportunities for the next 40 years in this space. So don't be afraid to dive in and see what you can do.
Yeah, I completely agree with that. At Supercritical, we look at cannabis generally as a disruptive technology. When I first started my career, it was in the early 90s at NASDAQ, when stocks like Apple and Microsoft and Oracle, like you could buy those for $10. You had no idea where that was going. And I feel like we're very similar right now in cannabis because there are so many applications for it. And we're just starting to figure it out right now. So whether that is for health, for wellness, for recreation, for personal grooming, it's going to be everywhere. And I think right now where we're seeing some of these large CPG companies coming in, looking at how they can bring that into their massive consumer channels, I think it's going to be so different even a year from now. And there's room, there's opportunity. So whether we're at 2.0, 3.0, I don't think the numbers matter. I just think that it's going to accelerate and continue to innovate, and everybody will be impacted.
Yeah, I think what you also have to remember is, the forms that we have for the consumption of cannabis, have largely been developed and used, in various forms for a good number of years. It's nothing new to smoke it. It's nothing new that folks have hash or having gummies or edibles. All that stuff has been around for a while. But as you have this decriminalization or legalization, it's also going to open up hopefully research, which we really haven't had. And I think that's really where the industry will take off. Where you have very innovative products that are focused on human health conditions, and where there'll be new form factors and efficacy that will be showcased on that. And I think all you have to do is look at the most recent acquisition of GW Pharma, which developed, Epidiolex, which was focused on seizures specifically for young children, and understand how the market is changing, where that was sort of on its own. And now you have a large company like Jazz Pharmaceuticals purchasing GW. I think you'll continue to see in this new wave of innovation on cannabis, a lot is going to be a much more sophisticated methods of consuming. You're always going to have that, the traditional way that folks feel good and for their general health and involved in their daily lives, but there's a lot more to go in terms of innovative products down the road.
Yeah, I would add to that too, that right now we're thinking about cannabis in terms of the way that we consume it, but I would also add that hemp is going to continue to grow and be gigantic. Currently, I sit on the advisory board of a company called Truly Green Plastic, which takes hemp fiber waste and combines that in a process that makes plastic. So it's really is truly green plastic, 100% biodegradable. and it leaves no carbon footprint. So applications like that, where we're taking something that can go into textiles, can, like, plastic pallets that we see at Costco now can be made from hemp fiber through this process. So, like, expand our minds tenfold, and you can just take it anywhere.
Let's localize this a little bit and talk about opportunities in the Midwest. Patrick, I would be curious to get your perspective. Michael, Carrie, and I are all based here, but from a perspective of someone in Colorado, a pioneering state, what opportunities do you see here from the ancillary and plant touching standpoint?
No, I mean, I think there's a lot of the same opportunities we experience in all the states that legalize, obviously. That is the big driver of industry development, is the regulatory changes. So, we look at it, I think, at least I look at it from Colorado, a more mature state that just happened to grow 20+% this last year, thanks to COVID. I see the development of the Midwest states as opportunities to expand that market, to expand, make the tent bigger, bring more people in, expose people to the industry, and every new person that gets a positive exposure to the industry becomes an advocate, or at least someone who's neutral and supportive. So we're excited about growing the target addressable market for a lot of our portfolio companies that provide ancillary products and services. COVID isn't making it easy to network with folks in the Midwest from here out in Colorado, but we have a broad network of investors and alumni, portfolio CEOs, mentors, industry advisors, and if folks want to get in touch with us, they usually do find a way. We also are, very open. Reach out to me on LinkedIn. We'll have a conversation. It's not a big deal. There's a lot of technology and tools, and I think we're more open to using those to establish relationships now when we're so separated physically. So we continue on.
Definitely.
And go ahead, Carrie.
No, I agree with Patrick.
So
More
later in the
conversation,
program,
better.
yeah, and digital tools obviously allow us to separate these gaps. Later in the program, Mitch Myers from Believe in Missouri will be on. Mitch started her career, or her cannabis career, in Illinois, and now is heavily involved in Missouri. Michael, from a Chicago-based VC standpoint, and for a lot of the Missouri operators that are in the audience today, what's your take on that particular state's market?
Yeah, no, I think it's still early to be had. I think, the biggest issue, and I think your panel previous to this touched upon it. I think, one of the early results from the medical patients is pretty encouraging, especially when you compare it to Illinois. Although I think it's almost an unfair comparison. Unfortunately, Illinois had a very poorly designed or implemented program in terms of approved medical conditions. But I think it's good as a starting point. I think the most difficult point for Missouri is similar to what the issue that Colorado had, was that you had residency requirements, and in terms of for investing. And when I was early involved in looking at things in Colorado back in 2013, there was very interesting ways that people were looking at getting around these residency rules of other types of structures to be investors. I think folks who want to be involved in Missouri probably have access to that as well. But there's so many great opportunities in cannabis, especially as you see the limited license states on the East Coast, et cetera, that there's a finite amount of capital. We haven't solved the banking issues for a lot of institutions or other folks to put money in. So I think that's constrained Missouri, unfortunately, about being able to gain access to folks that want to invest and folks adhering to the residency. But I'm a big believer in legalization happening across the U.S., as well as there being larger regional clusters, and clearly the Midwest will be a very strong cluster between Illinois, Michigan, Ohio, Missouri, and Minnesota to the less degree, at least right now. But all those states can be very powerful. And then we also have Western PA, and PA being a very strong market. So I'm very encouraged. Illinois is been going incredibly well, and I think Missouri will get there. I think it just may be a little bit longer, and hopefully they'll remove these residency requirements for investors, and I think that'll help it to grow even faster.
Now, we touched a little bit about banking normalization, change of administration. From like a venture standpoint, how do you bake in the anticipation of like a bigger market, bigger opportunities for cannabis companies to grow unrestrained by federal law? Yeah, when it comes to valuations, do you have entrepreneurs saying, "Hey, it's going legal, so I should be worth this," or starting maybe with Carrie in terms of like managing the expectations of entrepreneurs, particularly in times like these where it seems like things are going to be considerably more open?
Right. I would tell every single entrepreneur, focus on your business, focus on the milestones that you're going to achieve. That's what's going to get your valuation to increase. It's not going to be a market where just because it opens up, everybody can make a boatload of money. That's not how it is. We do need to get more access, better access to capital, and more diverse capital sources to the. It has any questions about how to do that, please send us a note at info@supercritical.agency. We want to talk about it. But I do feel we need to bring up the very important of social equity, because there are so many people still in jail because of the war on drugs. My business partner, Sparky, is a survivor of the war on drugs, went to prison for the crime of helping cancer patients get their cannabis. So we have to remember as an industry that we have to help those. So whether or not it opens up federally, that's great, but you still need to have a solid business with a solid business plan, with access to capital, and know how you're going to grow that business. And that's first and foremost. All these different conversations about quick fixes, and we hear a lot about SPACs coming out, and all these different parts of, how to raise money fast. My third-year career in capital markets, in financial services, has shown me really it's the person that has a strong business plan and has a solid understanding of operations, finance, technology is going to win the day. So focus on that.
And now on the other side of the table, starting with Michael, entrepreneur comes in, are the valuations coming to you in Missouri and other states? Are these entrepreneurs stoned in terms of whether or not they're going to get that?
I think some were. I think there's a rational, exuberance to some degree. I think we should all be excited and a little bit high on the industry, and if we're true believers of the medicinal qualities and the ability for it to be integrated into the fabrics of our lives. I think it's a monstrous opportunity, but there's phases of where the true value creation is, and I think I think Brad, you and I have spoken about this before. I think the unfortunate thing, and this also goes to the social equity piece as well, is that a lot of folks look at the license itself as being a lottery ticket for huge amounts of wealth, and that's just not the reality. The ability is sort of access to the to the industry, which is critically important, but it takes a lot of work. You'll ask any of these operators who've been this and doing this day in, day out. It's been incredibly difficult, and the changes of the regulations, etc. So I think entrepreneurs just really need to understand, one, yeah, you need to get a license, but after that, all the heavy lifting is there. So really be thinking about the critical milestones that you need or can achieve. It's better to sort of be able to prove your capability even on a smaller scale before you get larger. And then that allows you through that cash flow to sort of grow. But when you have all these grandiose plans to raise huge amounts of money on just the backs of folks who may have not had much experience building business and just getting a license and expecting to get sky high valuations, it's a little bit mismarked. And as I've seen personally, a lot of those folks went out to the market with very high valuations. They didn't get money, and they've wasted a year, year and a half, and now they're back to the drawing boards and back to a more reasonable valuation. So it's what happens also in the tech world or any other startup world. I think you just have to be reasonable and find out how do you get started. You need to be in it to win it. So how do you get to market as soon as possible in a reasonable way?
And
Exactly.
Patrick, talking and all of you, but starting with Patrick, in terms of vertical ancillary cannabis sectors, what opportunities are you looking at right now that you may not have been a year or two ago?
Yeah. Well, yeah, it's a great question. For the last sort of 18 months, a lot of our focus has been services, technologies that a licensed business can subscribe to, a SaaS business where the licensed business can look at what they're spending on that service and directly attribute it to new sales. Driving sales and profitability are obviously the goals of a lot of businesses. And especially, it's even more important in the cannabis industry because of IRS code 280E, licensed operators can't deduct general and administrative expenses when they're calculating their taxes, right? So cannabis businesses will be taxed on gross profit, not net profit. In between there's a lot of technologies and expenses they need to pay for, but they don't get any credit for them when they're calculating their taxes. So the more seasoned operators are looking for a software like where they can say, hey, I'm going to pay you, software provider, $1, and you're going to turn your software will generate $16 in revenue for me. That is one of the most powerful selling tools for ancillary products and services companies right now in the licensed businesses. So anything that can be directly attributable to sales is an area where we're seeing interest and we're doing investment. Another area, and it can be related, are data and analytics. Again, people are trying to understand what works and what doesn't. And, the soft, I think this is a better layout. I think this is a better product mix, doesn't cut it anymore. I mean, we have companies looking at SKU level profitability for dispensaries and then demographics around the store to sort of help them figure out what products they should be selling. And then at a higher level, they say, okay, we like these gummies and we want to have them in our store on our shelves. Maybe there's a better performing, lower priced gummy that is just there and that will unlock value in the business. And it's those groups, those technology companies, those consulting companies that can help, make the businesses run better at a top line and bottom line are ones that we're looking at.
Yep. Patrick makes an excellent point. One thing that I want to emphasize very strongly for the entrepreneurs in the audience is that you need to know your financials cold. You need to know what the profit margin is, what your cash burn is, what the annual recurring revenue is. You need to understand your unit costs and have those numbers available and know what they mean, so that when you are talking to a VC, when you have the attention of someone who may invest in your company, that you can assure them that it's sustainable and repeatable revenue and you know how you're going to get it.
And in our remaining minutes, a couple of questions from the chat in the audience. How do VCs look at debt capital versus equity, and how do you, as a venture investor, also help entrepreneurs provide or at least identify those funding sources? Carrie, starting with you.
Hmm. Well, for those that don't know, the difference between debt and equity, and I'll say very simply, with equity, you are an owner of the company. You're investing capital in that company, and in exchange, you're getting a percentage ownership of it. With debt, you're lending money to the company, and there's an obligation for the company to pay you back. With equity, there is no obligation to pay you back. I will say the primary difference for an entrepreneur with debt versus equity has to do with the valuation. So for example, if it's the first time out to the market and you're issuing a callable note, you don't have to have a valuation for your company, and that may help you long term. Once you do an equity offering, if you're raising equity capital, you will have to establish your initial valuation. You need to be very careful about that, not making it too high, too low, because that can impact you in subsequent funding rounds. I will say that very specifically, you want to understand things like capital structure and the optimal capital mix for your company, cost of capital, and all of those considerations. So if you're not familiar with those terms or you haven't had the opportunity or the experience to do that, definitely consult a professional, because there are advantages and disadvantages for each.
Excellent. And so we had a question about B Corps and socially driven enterprises. B Corps are benefits corporations that are for-profit companies with a triple bottom line. In the cannabis space, because of the social history and the criminal justice history, there's a lot of interesting corporate formations that are occurring. From a ventures perspective, does a B Corp designation have a positive or negative impact on how you see the company?
I think it's great, but my experience is launching businesses, and especially launching businesses in the cannabis industry, is very, very, very hard. Anything you do to make it more difficult, if it does make it more difficult for you, should be abandoned in the early stages, and there should be a focus on getting the business up and going. There's always, we say, like, you got to have a business today to realize your vision of tomorrow. So do whatever you can to simplify your business and make sure it can be sustainable, that you have control, that you have the right economics with your investors. And if they love B Corps, great. That is part of your vision. You can state it, but you got to get there first. I don't think there's anything wrong with it. I think it's a really positive thing, but just seeing the success and how much time and energy, any distraction, if as an investor, if I perceive any distraction to the goal of getting the business up and going and successful, I'm going to encourage the founders to sort of discard those distractions, as I think any experienced entrepreneur will. However, if it enables them to unlock a new market, if it helps them raise capital, I'm all for it. It has to be a positive.
Very good. On our remaining couple of minutes, I'm going to ask each of you, what predictions do you have by the end of this year in terms of the market, and what do you starting with Michael Gruber, what do you think you'll be focusing on toward the end of this year that you're not focusing on right now?
I'm hoping we get greater clarity as to where things are going legislatively to the industry. It's not exactly answering your question, but we've had a lot of momentum and a lot of talk about decriminalization as well as full federal legalization. But it's uncertain what we have. We have the SAFE Act, we have the MORE Act, we have all these legislation there, but it becomes unclear what's happening. I think and there's a lot of effort with the new administration, including committees, which Schumer is sort of highlighting that is trying to push this forward. But I think we have so many divergent views and emphasis on that. It's unclear where that will end up, because clearly, as was mentioned before, social justice is a key piece, and the question is, how much does that stymie other movements. What I would look at, and where I think the big opportunity for the entire industry, for both existing businesses as well as new operators and entrepreneurs, is really the ability to sort of free up, have something that effectively is around the Safe Banking Act, which allows companies to access banking services. It just will free up and put oil on the gears to allow companies to operate without trying to do lots of different machinations, which has a lot of friction and costs. And then it also will allow companies, if they're big enough, to access some of the traditional public exchanges, on the U.S., the NASDAQ, NYSE, and with that, the freer flow of capital will allow companies to grow, and I think it just allows companies across the entire spectrum to have access to cheaper capital, which then allows you to sort of grow. I think we're all continue to be stymied in the industry because just there's a limited amount of capital, and there's only so many folks that have been willing to put money in. And that sphere, that tent continues to sort of get bigger, but there's a limit, especially how big this industry is. So I would just sort of keep the eye on that. I would just make the point that a lot of people are getting into the industry. They hear about this federal legalization. I think people should not be distracted and believe that federal legalization means that you're going to be able to freely import and export stuff. You could be able to, you're in, New York, you're going to be able to get Colorado cannabis or California cannabis, or you'll be able to send it off to other countries. It's not going to mean that. Just think about every single state which has these budget shortfalls, and they've passed, cannabis legislation to fix those revenue budget shortfalls. They're going to keep that revenue. And so it's going to be over a period of time. It's going to be one step, at a time, of just, maybe it's a super regional approach. Maybe it's just access to research that you're sharing, samples across states. But, federal legalization is not the panacea. So I think that's just important for people to understand that. And there's also the risk that, for some U.S. states that are just getting going, you'd always worry if you haven't legalized yet, you would have the whole influx of cannabis from other states, which, already have, the establishment up. So, I think this is sort of a long ball scenario where it's going to take a lot of time, for you to, truly see how the market's going to end up. But clearly, the market, more and more folks will be in legalized states, and the market will continue to get more robust and larger over time.
Carrie, how are you advising your clients, and what do you think? What do you anticipate you'll be sharing, a year from now that you're not sharing now?
Honestly, I don't think we know. I would say for me and for Supercritical, the key focus is on disruption. We at Supercritical are big fans of the book Play Bigger. So for all the entrepreneurs in the audience today, I suggest you reading it. But essentially what it's saying is we all have problems today that need to be solved. The person that's going to take the day is the one that is going to be providing a solution to a problem we have now in a way that we haven't thought about it. So, think about companies like Uber and Airbnb, simple problems that we had, hard to get a taxi in the rain, and they came up with a solution like that. So for cannabis, for hemp, for all of that, I think that's what's going to take the day. Of course, we're going to get to federal legalization. That's just going to happen. But what's really going to be pivotal and critical for entrepreneurs today is how you're going to be solving a problem that we all have, and maybe we just don't know how to get the solution, get the answer right now. But that's where I would suggest everyone to start putting their minds to.
And Patrick, we're going to close it with you. What's on your crystal ball?
Well, I think that we're probably not going to see too much activity in Washington, D.C. I know this is a big shock. Historically, we've been able to get so much done in the halls of Congress. So I'm not really expecting a whole lot from DC on the federal legalization effort. I think that's that's a ways off. However, I think we can look to what is happening with hemp and CBD in the different state houses. We're starting to see harmonization of different regulations and rules across different states to make it easier for entrepreneurs and business to be done. So we're starting to see this interesting harmonization trend. I think we can learn a lot from how CBD and hemp is being legalized and regulated. Now, it's kind of painful for a lot of people, but those who are students of how the FDA opens up new markets will understand that it goes slow. And it doesn't always feel like it's going in the direction that you want it to, but with time, we get there. And they do a good job of balancing the needs of their mandate, which is preserving consumer health, and that of acknowledging the reality of what's happening and acknowledging their limits on the ability to regulate it. So I think we're going to look to what's happening in the different state houses. I think we can learn a lot from CBD. I would like to see more movement on the federal level, but right now they're quite distracted and more partisan than ever, unfortunately. So I think like what Michael said, federal legalization isn't a panacea. I don't think that there's a lot of incentives to open up interstate commerce, but decriminalization, things like that, maybe improving the banking is a good thing. And I'm hopeful for those changes to come.
Thank you. Patrick Ray, Carrie Jordan, Michael Gruber, thank you so much for being part of the Grown In conversation this morning.
Happy to
Thanks
be
for
here.
including us. Great to be here with everyone.
Thank you, everybody. We'll be back in just a little bit.